Hey folks, if you're like a lot of people, you look at the stock market and you think, I'd like to buy, I'd like to get in, I just don't know where to start and I don't know what stock to trade. We're going to answer that in this video. Let's go. Hey folks, it's Jeremy Whaley here from Maestro, and I'm going to answer one of the biggest questions that I get. I've gotten it for years. Ever since I've been teaching people how to trade, I've received this question, and that has to do with which stock should I trade? How do I pick a good stock? And so I'm going to give you some criteria to look at in this video. Before we get there, if you haven't done so already, please like and subscribe to the channel so that you can get alerts and notifications when we release new things for you. All right. Let's jump in. As I mentioned, this is number one question. I get this question all the time. What's the best stock to trade? Or how do I know it's a good stock? How do I know it's worth trading? And here's my answer. Nobody ever likes it, but here is my answer. You ready? I'll make it full screen so you can see it big. All stocks are winners. Isn't that mean? All stocks are winners. It's like stocks playing t-ball here. No, I'm just kidding. All stocks are winners. Your job is to determine the right time to buy or sell so that you can maximize the opportunity. And, you know, I kind of laugh about it, but it's really true. The reality is all stocks have opportunity. All stocks, you can make money with all of them. But in order to do that, you still have to do the same process, which is to identify the right time to get in, the right time to get out, do your trading plan, all the stuff that we teach you to do whenever you're picking winning stocks. But it is true also that some stocks are better to trade. Some present more opportunities. Some present easier opportunities that you can use to profit a little bit faster. And so that's what I want to share with you here. And I've taken this from my trade execution checklist, which I'll actually make available to you at the end. But this is the first step, and that is to pick a stock. You say, which stock do I pick? I don't know which one to pick. And the answer is pick any stock as long as it makes sense to trade. And so the kind of the core criteria that I look at, generally speaking, I'm looking for stocks that have good average daily volume, and that number is 1 to 2 million. Now, you look, if you have a stock that on average has a couple million shares that it's trading, and then today it happened to dip down and only traded 500,000, that's okay. There's nothing wrong with that stock. Okay, but in general, I want to trade stocks that have a little bit higher volume. They have more people trading them because it has to do with liquidity and it's easier to get in and to get out. The next one, especially if you're trading options, is you need the stock to be optionable. Not all stocks are optionable, which means they don't all trade options. Now today, more are than there used to be, but there's still some that are not. And so if you're wanting to trade options, you got to have stocks that are optionable. And then considering the options, we're going to look at the at-the-money open interest for the front month and the next month. And in general, I want that open interest for at-the-money to be about 500 or more. Okay. Now, if it's 5,000, that's great, but at least 500. Again, you can fudge it a little bit. If it's 452, that's fine. You know, it's not going to be the end of the world. Or if they've just issued the options and it's a little bit low because they haven't got a lot of open interest yet, that's fine as well. Look at historically what those options do. But the key here, kind of across the board for those top three, volume, optionable, obviously because you want to trade options, and then open interest, all of that has to do with liquidity, how easy it is to get in and how easy it is to get out. What you'll run into if you have a stock that doesn't have good liquidity, the spread between the bid and the ask price is going to be really big. And with options, that can really be quite costly and frustrating. So those are kind of some core criteria. And then the next one here is volatility. And this is not an actual measurement of volatility. It's not like implied volatility. But what I'm looking for is I'm looking for stocks that have a movement of at least 30 to 50% a year. Because if the stocks don't move, you're not going to make a lot of money with them. We make money as traders whenever stocks go up a lot or when they go down a lot. And the truth is we don't care if they go up or down. We just need the stocks to move. So volatility, I'm looking for 30 to 50%. So let's say, for example, that you're looking at a $100 stock, and let's say that stock routinely moves between $100 up to $150. Well, that's a 50% volatility. That's going to work for you. That's going to be a really good number. Let's say you're trading $100 stock, and over the last year, it has moved between $100 and $105. And sometimes it goes down to like 97. That's not a lot of volatility. It's going to be a lot harder to make money on that trade. What I run into a lot is I have clients and customers who, because they want cheaper stocks, they'll go find cheaper stocks that are more affordable. And then you look at it, and this stock has moved between $22 and $24 for the last 3 years. And it's just stuck. It goes nowhere. There's no volatility. There's not any money to be made there. I mean, there's a little bit, but it's not the easier money. And so these criteria are going to help you find trades, help you find stocks that are a lot easier to work with. And by the way, you could scan for these criteria. In fact, in my Mastering TradingView course, which is free and you can have access to that, I teach you guys how to do that. I actually show you how to set the scan up for that. So that's available for you. Some things to avoid is earnings. Generally speaking, I do not want to trade over earnings. So if earnings are coming up, I don't want to trade over earnings. IPOs, I do not trade initial public offerings pretty much ever. I don't need to go into details on that, but I don't trade IPOs. Stagnant stocks. You definitely don't want to trade stagnant stocks. They will not give you any money. They're boring. And irrational trading behavior. So let me see if I can find some examples of some of these. Earnings, IPOs, stagnant stocks, and irrational trading behavior. Let's come over to TradingView. Let's see what we've got. So as far as earnings are concerned, you can see across the bottom, if you turn it on, which it's a preference to turn it on, you'll see a little E. And anytime you see the E, generally speaking, I just try to not trade over the actual earnings day. That's a earnings announcement. Okay. So that's an easy one. IPOs, that's easy. Just don't trade IPOs. Stagnant stocks. Trying to think of one that has been a little bit stagnant as of late, since I don't trade them very often. Can't think of any. Let's look for an irrational one. BP is often a little bit irrational. British Petroleum. This is a good example of one that's not as easy to trade, because if you look at it, you see there's a lot of gaps and just kind of irrational behavior. There's actually logic to this one. The reason this looks so irrational is because it trades 24 hours. It trades on the other side of the ocean, because it trades in Europe as well. So these are what we call suspension gaps. But it still kind of gives you an idea. If you have a stock that's gapping a lot, like every other day, and it just kind of looks irrational, probably stay away from that until it settles down and becomes a little more rational. Otherwise, you're going to get a lot of frustrating whipsaws and stuff. As far as a stock that has been stagnant, I don't have any on my list here, and I should have prepared better. I don't have any off the top of my head. So let me... Oh, I can give you an example of... let's go to... I won't do a stock, but I know this chart has been stagnant. We'll go to Bitcoin, because Bitcoin has been very, very stagnant. So take a look at Bitcoin. You see how Bitcoin has been stuck, going nowhere? Do not trade. Okay? It's a perfect example right there. Do not trade. Now, eventually you can, and more recently, we've actually, looks like we're breaking out here in the last couple of trading sessions. We'll see where that goes. But as long as you're stuck and it's stagnant, it's not moving, that's what I'm talking about. You don't want to trade while it's stuck and it's stagnant. All right, folks, those are my basic criteria right there. And as I alluded to, this is actually part of a PDF that I'm making available for you right now called my Trade Execution Checklist. And all you need to do to get that is click below. There's an opportunity for you to enroll if you want to for my Trade for a Living 3-day challenge. And when you do that, I will send you this Trade Execution Checklist. That's absolutely free. Both of them are free. Okay, so even if you don't want to come to the challenge, that's fine. But I have an upcoming challenge, and what I'd like to do in the challenge is I'm going to give you more. I'll give you 3 days of this. So this is what, 7 or 8 minutes worth of information? Imagine 3 days. Okay, not long days. They're like, 45 minutes to an hour. But I can really go more in depth and teach you more of the trading systems and more of what it takes to actually trade for a living. So if you're interested in that, get yourself signed up. And as soon as you do that, I'll send you the Trade Execution Checklist. All right. Hope you guys have gotten a lot out of this. If you haven't done so already, like and subscribe to the channel so you can get your notifications and your updates. And until next time, I wish all of you the best. Happy trading, and we'll talk.